Hello everyone, welcome to Officers Adda 247. I hope everyone is good. So from today onwards we are going to start a special session of important questions of AB subject for JAIIB examination, and in this series of the session we will going to understand important concepts, important questions that all will be very useful for the upcoming examination. As we all know that PPB and AB exam just postponed, so this is not the time when we just sit back, relax. This is a very correct time when you just have to focus to understand all the concepts and all the difficult topic in very fine way and scored at least 70 to 75 marks in that exam. All right, and trust me, I am going to make it very easy for you guys. This for getting lectures, mock test, and all the live sessions. Just download the Adda 247 application and subscribe the Officers Adda 247 YouTube channel so that you can get all the things in one place. Alright. Quick update from my side, that is where we are starting a foundation batch for JAIIB examination, and it is especially for the English medium aspirant. So by subscribing this batch you will get the mock test, you will get the ebooks as well as a live session where you will just learn all the important concepts and hit the exam with very good score. All right, so this exam is going to start from the 7th February 2022, and this is also at very convenient price. That means you only have to pay 22% of the package. All right, with using the code Y422 you will avail the 78% discount, and you only have to pay 22% of that package. All right, so this is a very foundation batch, and I think you should subscribe this pack. By this you will get the mock test ebook as well as a live session. That is all requirement for the clearing the examination. Okay, so now just let's start the session. So the idea is we are going to just cover all the important concepts through the questions. All right, and that both are very important for the exam point of view. Both are very essential. That means you also have to just understand, or say, or also have to just learn all the important concepts, as well as you also have to do number of the questions for just getting a good score in the examination. All right, so now the question is, you invested a 10,000 rupees and your returns are 8% a year. So how long before your investment doubles? All right, so here we are going to understand a very golden rule, that is rule of 72. All right, so by applying that you can easily determine how long before your investment doubles. So rule of 72, it is a very quick and useful formula for estimating the number of the years, that is required to double the invested money at given annual rate of return. That means 72 divided by the annual rate of return. So in the rule of the 72, you do not have to consider the invested value. You only have to just mean about, that is how long it will take your investment would be doubled. All right. So here only two things you have to just think, that is the number of the years and annual rate of return. And it is approximately equal to. That's why here it is mentioned how long before your investment doubles. All right. So if you're talking about the number of the years, that is number of the years, and it is approximately equal to the 72, and it is divided by the what? That is annual rate of return. So here annual rate of return is given 8%. So so just we have to just put here 8, and we will get the answer, that is the 9 years. And you will get this kind of a question in the exam in the 0.5 marks. So it is a very important question for the exam point of view as well. So here you just understand the important concept, that is the rule of the 72, and it describes how long it will take for your investment double. All right, so it will take approximately 9 years for doubling your investment. Okay, question is a sum amount to 1331 rupees at a principal of 1000 rupees at 10% compounded annually So find the time. That means we have to just find out the time, that in how many years this 1000 rupees will become this 1331 rupees if it is compounding with a 10% annually. Alright. So we just know the formula of compound interest, that is A is equal to P 1 plus R divided by N to the power N multiplied by the T. So we know that this A represents amount payable. We know that this A represents amount payable, and amount payable, or say it is a principal plus interest. All right. You can also say that it is a total principal after the interest. It is a total principal plus after total principal after the interest. Okay. And this P represent principal amount. This R represent rate of interest. This R represent rate of interest, and this N represent, and this N is very important. Okay, so this N represent number of the times interest is compounding annually. So like in this question, it represents here that it is compounded annually. That means it is compounding in a year. So here N is equal to, here N will be like, here N will be the 1. Alright, if here it is mentioned that it is 10% compounded half yearly, if here it will be mentioned that is 10% compounded half yearly, that means here number of the times for interest is compounding and annually, that means here n would be equal to the 2. If it is mentioned here that is it is compounded half yearly, that means we will just write here n is equal to 2. But here it is mentioned that is 10% compounded annually, that means it is only one time it will compound in a year. Alright, so that's why we will just write here n is equal to 1. So we just here like datas are given, so the value of the A would be 1331. We have to just put the values here, and value of the P would be the 1000. After that 1 plus, and the rate of interest, this is 10% is given. So 10%, we know the 10% if we have to calculate, that will be equal to the 0.1. So just write 0.1 here divided by the n, which is n is equal to 1 to the power with the to the power n multiplied by the t, and t would be, that is we have to find out. Alright, the same thing it is given here. Look, this is a concept of n and it is very essential to understand. I am one more time I am repeating this. That is, if it is mentioned here that the rate of interest is compounded annually, so that means the rate of interest is only one time is compounding in a year. If it is mentioned here that is 10% compounded half yearly, that means number of the time interest is compounding is equal to the 2 time. Alright, but here it is mentioned that it is annually, that means we have to just put the value of the n is equal to 1. So now how we just calculate this 1331 and just 1000 in the denominator side, and it will be equal to 1.1 to the power t. So just look here, 1331 divided by the 1000 and will be equal to the, so we just write this 1.1 by this way, isn't it? And it will be to the power of the t. Now we just also write this value in the terms of 11 by 10 to the power 3. Alright, if we have to just further calculate this, you will just get the value of this 1000, like 11 to the power 3 will be equal to the 1331. So it will be again equal to the 11 by 10 to the power t. So the answer would be the 3 is equal to the 3 here. Alright. So if we have to just calculate in how many years this 1000 rupees will become 1331 rupees. So the answer would be the 3 years. All right. I hope it is understandable. I am just repeating this step one more time because it is very essential to understand that if I'm saying that 1331 is divided by the 1000 and it is equal to the 11 by 10 to the power t. All right. So if we have to just put the values in the terms of 11 by 10, so we know that 1331 is nothing but 11 to the power 3. All right. And this 10, this 1000 is nothing but 10 to the power 3. Okay. So we also can write here that is 11 by 10 to the power 3, and it will be equal to the 11 by 10 to the power t. So when we just have to calculate here, that means t equal to the 3 years. Okay. So the answer would be the 3 years. So that's how we just calculate our compounding interest questions. Okay. Next question is cost of machinery 2,52,000 rupees, salvage value 12,000 rupees, and useful life 6 years is given. So we have to just calculate annual depreciation with the method of the straight line. Alright. So now we have to just understand the meaning of the salvage value. We have to just understand the meaning of the useful life, and we also have to understand the meaning of the depreciation. All right. So we all just understand different things with the examples. So first understand the depreciation with the example. So suppose that yesterday I purchased a mobile phone of 10,000 rupees. All right. I purchased a phone of 10,000 rupees yesterday. And today I did not like this anymore. So I went to my friend and offered my phone for the same price 10,000 rupees. But my friend denied. My friend denied for for purchasing this phone 10,000 rupees. He said to me that now its value decreased. If you want to sell me the phone for 9,000 rupees, then it's okay for me. Then I will purchase. Alright. That means value of anything decreases with the time. Like I offered my phone to my friend for 10,000 rupees, but my friend denied for buying at the same price, and he said now its value decreased. If you want to sell me this phone, so you can sell me at the price of the 9,000 rupees. So value of anything decreases with the time, and this is called the depreciation. All right. One more example you should understand here. Just understand one more example. By this example, you will understand the salvage value and useful life of any asset. So suppose that I went to any car showroom. Suppose that I went to any car showroom. Suppose that I went to any car showroom for purchasing the car and asked for the price of the car. So the salesman just told me the price of the car, or say the salesman told me the ex showroom price. The salesman told me the ex showroom price, that is 10 lakh rupees. Okay. So I ready for paying the amount. I just ready for paying this amount for purchasing the car. But he said it is not the total cost of the car. There are some more costs associated with this, like RTO charges, insurance charges, etc. All right. So I asked the salesman that how much amount I have to pay for purchasing the car. So he said to me that you have to just pay 10 lakh 70,000 rupees, which is a total cost of the car. All right. So for calculating the depreciation, you always have to consider total cost of any asset. Okay. So the salesman told me that total cost of the car is 10 lakh 70,000 rupees, and we also know everything has its expected life also. Okay. So we also know that every like if I want to this purchase this car, so this purchase we like for depreciation we have to consider the total cost of any asset. Okay, and we also know that everything has its expected life also. We also know that everything has its expected life also. So till that time, till that time, that thing expected to work very well. That means expected life. What we understand by the expected life? That is till that time, that thing expected to work very well. Expected to work very well. All right. So you like I asked salesman that how much its life would be. So he just told me its life just its life 10 years. What type of the car I'm just going to purchase, and its life would be the 10 years. All right. Okay. So I just asked the salesman that if I have to sell this car, whatever I'm going to purchase the car, so if I have to sell this car after 10 years, so in what amount you may purchase from me? So he said, we will purchase after 10 years this car in 2 lakh rupees. In 2 lakh rupees. That means now this 2 lakh rupees would be considered as salvage value. Salvage value. This is also called salvage value, and this is also called residual value. Salvage value or say residual value. So he said after 10 years, if you just want to sell your car, all right, so you can just sell me this car for 2 lakh rupees. Okay, so that means after 10 years, this 10 years also known as a useful life of any asset. So useful life, that means after that time whatever the amount will be the of the asset is considered as a residual value or say salvage value of that asset. Okay, so if I ask you how much value of the car depreciated in 10 years, how you will calculate that you just purchased in 10 lakh 70,000 rupees, and after 10 years its value will be the 2 lakh rupees, and it is divided by the 10, that is number of the years or say useful life. So you just simply just solve this equation, and you will get 8 lakh 70,000 in the numerator side, and the denominator is a 10. So that means you will get 87,000 rupees per year. This would depreciate. Okay, so you will get by this that is 87,000 rupees per year. This car amount will be depreciated. So you learned how value of anything depreciated, and the same concept apply on the straight line method. The same concept we apply on the straight line method, like we have to just consider the total cost of any asset and its residual value after the useful life. Okay, after useful life, whatever the value we receive, it is known as the residual value or say salvage value. Okay, so the same method we apply in the straight line method. Okay, so for this question, how we just solve this kind of a question, like we have to just calculate our total cost. Here the total cost is given 2,52,000 rupees. So just put here we have to calculate annual depreciation. So what we have to do, we have to just write annual depreciation, which is equal to the, look, we have to just write here, that is annual depreciation, which is equal to the 2,52,000 minus its residual value. So its residual value is a 12,000 rupees, and it would be divided by the 6 years. Okay, now just solve this equation, that is 2,40,000 rupees divided by the 6, and it will be equal to the 40,000 rupees. 40,000 rupees per year. That means every year, that means every year the cost of the machinery would be reduced by the 40,000 rupees. Okay, so this is how we calculate the annual depreciation, and most of the one gave the correct answer for this question, because we are just understanding the concepts here. All right, so how we just solve the annual depreciation? Like total cost, we have to just consider the total cost. Suppose that here expenses also given for just installation of the machinery, so we also have to include that installation charges and another expenses. If any expenses happen, so we also have to include that expenses as well. Okay, so we have to just consider the total cost, and after that, if residual value is given, so we have to just write residual value, and is divided by the number of the years, and is divided by the number of the years. That's it. All right, for calculating the annual depreciation. So that's how we just solve this kind of a question. Now just understand another question, that is about the double entry principle means. If we are talking about what do we understand by the double entry principle means, then look, we entered all the financial transactions, as I told, we entered all the financial transactions in the journals. We entered all the financial transactions in the journal, and journal is a type of a diary. All right, and in which all the financial transactions record very first time. all the financial all the financial transactions record very first time. Okay, and it is based on double entry bookkeeping system. It is based on double entry bookkeeping system. So double entry bookkeeping system, that means double entry bookkeeping system says that every debit entry has its credit entry also. Every debit entry has its credit entry also. Suppose that you received, suppose that you received salary. Okay, suppose that you receive salary of 20,000 rupees. That means if salary is credited into your account, if salary is credited into your account, that means someone's account, that means someone's account would be debited also. That's why it is credited here. That means somewhere it is debited. Okay, so that's why it is called every debit has its credit entry also. So in double entry bookkeeping system, what we have to understand? We have to understand that every debit entry has its credit entry also, because we understand, or the assumption that if anything is credited at anywhere, that means somewhere it is also would be the debited. Like suppose that our salary is credited. Suppose that our salary is credited with the 20,000 rupees. That means somewhere someone's account debited by the 20,000 rupees as well. That's why it is credited here. All right. Okay. Okay. So answer of this question, like double entry principle means having debit for every credit and credit for each debit. So the answer would be the third part, third option. That is double entry principle means that having debit for every credit and credit for each debit, or say every debit has its credit entry also. All right. Okay, so that's all for this session. In tomorrow's session, we will meet at the same time and just do another questions and learn important concepts from that. Meanwhile, if you like this video, just hit the like button and also join us on the Telegram channel. The link is given below this video. All right. So just thanks for watching this video, and just like this video, share this video, and subscribe the channel, so you can get all the important lectures from us. All right.